Blockchain is a decentralized and distributed digital ledger that records transactions across multiple computers or nodes. Blockchain was originally introduced as the underlying technology for Bitcoin, the first cryptocurrency, but its potential applications have expanded far beyond that. At its core, a blockchain is a chain of blocks, where each block contains a list of transactions. These transactions are bundled together in blocks and added to the chain in a chronological order. Each block also contains a reference to the previous block, forming a linked structure. One of the key features of blockchain is its decentralized nature. Rather than relying on a central authority, like a bank or government, blockchain transactions are verified and recorded by a network of participants known as nodes. These nodes maintain copies of the blockchain and work together to reach consensus on the validity of transactions. The process of reaching consensus is typically achieved through a consensus algorithm, such as proof of work or proof of stake. These algorithms ensure that the majority of nodes agree on the state of the blockchain, preventing tampering or unauthorized modifications. Another important aspect of blockchain is its immutability. Once a transaction is recorded on the blockchain, it is extremely difficult to alter or delete. This makes blockchain particularly useful for applications where transparency, security, and trust are essential, such as financial transactions, supply chain management, voting systems, and more. Blockchain technology has also given rise to the development of smart contracts, which are self-executing contracts with the terms of the agreement directly written into code. Smart contracts automatically enforce the terms, execute actions, and trigger further transactions based on predefined conditions, eliminating the need for intermediaries in many cases. Overall, blockchain technology has the potential to revolutionize various industries by providing a transparent, secure, and decentralized platform for conducting transactions and managing digital assets. Structure and components. A blockchain is a digital ledger that consists of a chain of blocks, each containing a list of transactions. The blocks are linked together using cryptographic hashes, forming a sequential and immutable record of transactions. Each block typically contains data, the transactions or other information being recorded. Hash, a unique digital fingerprint generated through a cryptographic hash function, which ensures the integrity of the block's data. Previous hash, the hash of the previous block in the chain, which creates a chronological order and strengthens the security of the blockchain. Nonce, a random number used in the mining process. Timestamp, the time when the block is added to the blockchain. Decentralization and consensus. Blockchain operates in a decentralized manner, meaning there is no central authority controlling or verifying the transactions. Instead, multiple participants or nodes in the network maintain copies of the blockchain and collaborate to validate transactions and reach consensus on the state of the blockchain. Consensus algorithms ensure that nodes agree on the validity and order of transactions. The two most common algorithms are proof of work. In proof of work, nodes or miners compete to solve complex mathematical puzzles to validate transactions and add blocks to the chain. This requires significant computational power, and the first miner to solve the puzzle is rewarded with cryptocurrency. Proof of work is resource-intensive but provides a high level of security. Proof of stake. In proof of stake, the validator's right to create a new block is determined by the number of coins they hold or are willing to stake. As collateral, validators are chosen randomly, but those with more stakes have a higher chance of being selected. Proof of stake is less resource-intensive but still ensures security through economic incentives. Security and immutability. Blockchain achieves security and immutability through cryptographic techniques. Once a block is added to the chain, it becomes very difficult to alter or delete the recorded transactions due to the following factors. Hashing. Each block's hash is computed based on its data, and any change in the data will result in a different hash. As a result, altering a block would require changing subsequent blocks and their hashes, making it computationally infeasible. Distributed copies. Blockchain's decentralized nature means that multiple nodes store copies of the blockchain. To tamper with a block, an attacker would need to compromise a majority of the nodes simultaneously, which is highly unlikely. Consensus mechanisms. Consensus algorithms ensure that the majority of nodes agree on the state of the blockchain. An attacker would need to control a significant portion of the network's computational power or stake to manipulate transactions, making the blockchain more resilient to attacks. Applications. Blockchain technology has a wide range of potential applications beyond cryptocurrencies. Some notable examples include financial services. Blockchain can streamline and secure various financial transactions, including cross-border payments, remittances, asset tokenization, and decentralized finance applications. Supply chain management. Blockchain can provide transparency and traceability in supply chains, allowing participants to track and verify the movement of goods, verify product authenticity, and ensure fair labor practices. Healthcare. Blockchain can enhance the security and privacy of health records, enable secure sharing of medical data, and facilitate the tracking of pharmaceutical supply chains. Voting systems. Blockchain-based voting systems can improve transparency, reduce fraud, and enhance trust in the electoral process by providing an immutable and auditable record of votes. Intellectual property. Blockchain can be used to establish proof of ownership and protect intellectual property rights by creating a timestamp and tamper-proof record of creations and transactions. Challenges and future development. Despite its potential, blockchain technology faces certain challenges, including scalability, regulatory frameworks, and interoperability between different blockchains. Researchers and developers are actively working on solutions such as sharding, Layer 2 protocols, and alternative consensus mechanisms to address these issues and expand blockchain's capabilities. Blockchain is a decentralized, transparent, and secure technology that enables the recording and validation of transactions without the need for intermediaries. Its potential spans across various industries, offering new possibilities for efficiency, trust, and innovation. Thanks for watching. Please like, subscribe and share it with your friends.